Black Friday is coming, and for the adults in your life who love the coolest toys, well, there's something for them this year too. Bartesian is the premier craft cocktail maker that automatically makes more than 60 seasonal and classic cocktails, each in under 30 seconds at the push of a button. And right now, Bartesian is having a huge site-wide sale. You can get $100 off any cocktail maker or cocktail maker bundle when you spend $400 or more. So, if the cocktail lover in your life has been good this year, or the right kind of bad, get them Bartesian. At the push of a button, make bar-quality cosmopolitans, martinis, Manhattans, and more. All in just 30 seconds. All for $100 off. Amazing toys aren't just for kids. Get $100 off a cocktail maker when you spend $400 through Cyber Monday. Visit bartesian.com/cocktail. That's BARTESIAN.com/cocktail.
This is Scott Becker with the Becker Private Equity and Business Podcast. We're joined regularly by brilliant private equity and business colleagues and people that understand the business better than anybody else in the world. Today is one of those people. We're joined by Rick Kess of RSM. RSM, of course, is the sort of preeminent mid-market private equity consulting firm, a whole range of different services, brilliant people. Rick, what's going on in the private equity world? Let me tee you up. What are a couple of trends that you're watching currently?
Yeah, Scott, I mean, obviously, a lot of our private equity clients had kind of been waiting to see what happens with the election. And obviously that's kind of past us. We know where things sit there. And I think that's reduced uncertainty in a lot of positions. So I think just because of that, I think we're seeing a little bit more like action. We're fielding a lot more calls than we were, 6 months ago. Now that's kind of off the sidelines. So I think just post-election activity has really been, I'd say, pretty robust in my opinion. And we've been pretty excited to see that, and not all that surprised. Once uncertainty is removed from a decision-making process, obviously decisions are easier to be made. So I think that's obviously helped things out a lot from that perspective.
Let me ask you a question. I won't go towards the election speaking, though you are a Minnesotan, and it is shocking to find out how not great a candidate Tim Walz ended up being. But I am on a digression and a tangent there, so I'll bring us back to the issue at hand. Rick, interest rates. People were seeing interest rates go down. Now it seems like growth is still going pretty well in the country. All of a sudden, you see the 2-year Treasury yield, the 3-year Treasury yield back at 4.3, 4.4, sending with the 10-year. All of a sudden, things don't seem like they're going down so quickly. Any thoughts there on what we could expect from a rate environment? And how much is that going to impact the private equity deal flow and deal market? Seems like the private equity funds are just excited to be back at it with a vengeance, but interest rates are a real issue, a real thing. But what's going to happen there? Any sense?
Yeah, I mean, I think, it's tough to know, right? But I think in some respects, I think there was anticipation that we would continue to see, 25 basis point cuts, over the next few cycles into 2025 and even maybe into 2026, bringing us back to maybe normal levels of the Fed funds rate. I don't know that we've completely changed our tune on that yet. I think there are some indications, maybe like you pointed out, that perhaps we don't want to go too far too fast. But I still think there's, some chance, or, I wouldn't say the word probability, but there's some chance that we continue to see that 25 basis cut for the next few cycles as we had initially thought we would see. But yeah, I think you're right. Without those reductions in interest rates, could private equity deal flow, be impacted? And it probably will slow it down if, we go a couple cycles without a reduction. But I think on the other end of that, the activity given, the excitement level that now the uncertainty of elections are kind of beyond us, I think it could overstate, the impact of the interest rate, just because, as we've talked about for the last year or so, we've seen a deal flow slowdown, but we all know there is a lot of dry powder there. There is all these companies that, kind of went through the 2020 cycle, and then we kind of get into that 5-year hold period, and whether or not we'll make some of those transactions occur just because of a hold period perspective. So I think there's a lot of, tailwinds to push past the headwinds that might be there if interest rates don't come down the way that we would have expected them to.
No, absolutely fascinating. Right. You're right. If they don't come down as expected, it could cause some serious hiccups. I think that's exactly right. Fascinating. And Rick, we see it at the McGuire Woods law firm, and I see it throughout the universe. People are getting very busy with deal activity again. What's your sense? Is that going to continue? Is that just is it preordained that next year is going to be a good deal year, or are there things that could still screw that up?
Well, there's always things that could screw it up. I mean, whether it's geopolitical, whether it's, something domestically that could impact it, or like we talked about interest rates, if they don't kind of come through the way that we would hope or expect them to, that could put some potential headwinds in front of us. But, I think, just being optimistic like you are, I'd say we're in the same spot that we think 2025 will be a great year, hopefully.
Thank you very, very much. And anything else that's top of mind that you want to share with listeners? I see the mega funds, KKRs of the world, Blackstone's to an extent, the Apollos, busier than I've seen them in years. It seems like all of a sudden just at it for the last 6-8 months. Are we starting to see the same thing with small and mid-sized funds? I know I'm an investor in some small and mid-sized funds, not so small, but multi-billion-dollar funds. And I'm starting to see capital calls again. Is that a good sign that people are ready to get after it again? Or what's your sense of the divergence between mega funds and the smaller funds?
Yeah, I think we've always looked at the mega funds as a little bit of like the canary in the coal mine or the trendsetter, just given their resource levels and their ability to do things that maybe mid-sized or smaller funds can't do, whether it's from a lending perspective or otherwise. So I do think we do see them as setting trend for mid and smaller funds. And to your point, I think we're starting to see that activity kind of hit the mid-market funds that obviously RSM and other firms kind of focus on. So yeah, I do think, we're seeing that deal activity in the mid-market really pick up here, and especially post-election, just the call volume and the activity. And like you said, the level of overall, kind of engagement of our people has really gone up in the last couple of weeks, just because that uncertainty, tax, if you will, is kind of removed, and obviously decisions are a little easier to make now, knowing what we know and what we can expect. Especially considering this administration will be the same administration we had 4 years ago, so we at least have an idea of what direction they went then, and kind of can use that as a proxy of where we would expect them to go in this upcoming cycle.
Thank you very, very much. So lots to keep our eyes on. I mean, obviously, sort of towards the very end of the year, we're not going to see, we're not going to see that many deals close, I assume. Just people start getting busy with Thanksgiving, Christmas, holidays, et cetera, et cetera. But we do see much more activity. There's not the threat right now of capital gains taxes going up next year, at least not currently. So people don't have that on their radar, something to be concerned about. So that's good news, of course. And fascinating to watch what's going on there. It does seem like a lot of excitement, but still a lot of inflation out there that they've got to deal with before the rates really go down too much.
Yeah, obviously, those are all related, economic levers. And so I do think you're right that, inflation continues to be the thing that I think gets a lot of headlines, obviously has the Fed, kind of reacting in ways that we'll be curious to see how they react. But yeah, that's definitely the levers that are kind of at play in those decision-making kind of processes.
Rick, as always, fantastic to get to visit with you on the Becker Private Equity Business Podcast. Again, we're with Rick Kess of RSM, one of the most listened to guests. Thank you for joining us today on the Becker Private Equity and Business Podcast. Thank you very, very much.
Thank you, Scott.
Black Friday is coming, and for the adults in your life who love the coolest toys, well, there's something for them this year too. Bartesian is the premier craft cocktail maker that automatically makes more than 60 seasonal and classic cocktails, each in under 30 seconds at the push of a button. And right now, Bartesian is having a huge site-wide sale. You can get $100 off any cocktail maker or cocktail maker bundle when you spend $400 or more. So, if the cocktail lover in your life has been good this year, or the right kind of bad, get them Bartesian. At the push of a button, make bar-quality cosmopolitans, martinis, Manhattans, and more. All in just 30 seconds. All for $100 off. Amazing toys aren't just for kids. Get $100 off a cocktail maker when you spend $400 through Cyber Monday. Visit bartesian.com/cocktail. That's BARTESIAN.com/cocktail.